Hey folks, and welcome to Market Correction Analysis by InTheMoneyStocks.com for August 10th, 2007. Quite a day today again, and I'm going to start out with our normal announcements, and the announcements are as follows. We have the free trial of the day trading intraday stock chat on Monday, August 10th, that's this coming Monday. Email me at Gareth, G-A-R-E-T-H, at InTheMoneyStocks.com if you are interested. Alright folks, you must email me by Saturday. Emails on Sunday, there's no guarantee I'll get back to you. Alright, so make sure if you're interested, email me at Gareth, G-A-R-E-T-H, at InTheMoneyStocks.com. We invite all of you to come join the Intraday Stock Chat. Phenomenal product. A full chat room with many people in it, many good traders in it, including myself. We help others trade, others learn the technicals of the markets, and read the charts and level 2s and so forth. It's a phenomenal thing. Alright folks, getting right into the markets here. We had quite a day today. Another whipsaw Friday, guys. Last Friday we got crushed. This Friday we looked like we were going to get crushed. And instead, as I said in the chat today, chances are they're going to push it up. And let me explain this, guys. I am a huge contrarian. I love technical analysis and contrarian thinking. And my thinking was as follows. Last week, they crushed us on Friday. This week, everyone will expect us to get crushed on Friday based on the idea of not wanting to hold into the weekend. Therefore, if we are down big, we're going to rally and close near the flat line. And that's essentially what we did. Look at this. This is a NASDAQ intraday chart. We gapped down. We went lower. We rallied hard, going positive, piercing the 200 moving average right here on the intraday chart. Sold off. Rallied into the close. And that's where we closed. NASDAQ down 11. Alright? Now what's interesting here that I'm going to bring up is that right after the close, and this is interesting because we had some interesting news today, guys. We had the Fed adding $38 billion in liquidity into this market. And this was an attempt to get the credit situation under control. Because by adding liquidity, what you can do is bail out some of those lenders, if you will. Not necessarily bail them out, but what they did with the $38 billion was they bought the debt. They bought debt of these issues, these problem creditors, and it's not a true bailout, but it was the closest thing to a rate cut that they could get to without actually doing it. All right, folks. And we know the European Union yesterday added liquidity to their market too. Now listen, it's not that simple, folks. The Fed just can't add money to the market and hope it saves the issues going on in the market because the underlying issues are much deeper. You got consumers slowing their spending habits. You got the housing market coming down hard. You got oil at 70. You got the economy slowing. And you got these credit mortgage bankers going out of business left and right. Hedge funds blowing up. A Goldman one today announced that they're down 26%. And when you figure in the fact that these guys have 10-to-1 margin in their hedge funds, pretty much a hedge fund down 26% is a hedge fund out of business. Because once you get those margin calls coming, you go back to cash, 26% is pretty much it. So, folks, I want to make you guys aware that the Fed here adding this much liquidity, it's not going to save anything, all right? What this does do, however, is give a little ease to what's going on, and that's why one of the reasons why we rallied. Every time we tried to break down here, we rallied up. Money came in, huge amounts of buy pressure. Buying volume came in by the billions, if you would, and the Fed every 3 times during the day today, the Fed added liquidity to the market. All right, 3 times, once in the early morning, once mid-morning, and once in the afternoon. All right, and what this did again is give the market confidence that the Fed is there to bail out the situation. In reality, what it comes down to is there's not much they can do, folks. I mean, they can add liquidity, but unless they're going to cut rates and cause the dollar to crash, because you guys know that's the situation that will come to the forefront, unless they cut rates, which causes the dollar to decline in value against all other currencies, that's not much they can do. Alright, folks, looking at the chart here, what I want to show you guys and bring your attention to is we had a possible setup intraday of a head and shoulders pattern, and I want to show you that. Look at this right here. We have a shoulder, head, shoulder. Alright, what happened here? Well, we sold off here looking like we were going to break, and we will draw a line here. This is one line here. Alright, where was that? Alright, right here. Actually, we can draw it right up here. Alright, here you guys go. We have the head and shoulders formation. And what you want to look for is you see a break below, but then what you need to do is you need to see a break of this candle here, folks. And we just didn't see that technically. Alright, We tried to break it a couple times, but we never closed below that low of that candle for a signal to go short in this market. Every time we got down to this, look at how many times we tried. 1, 2, 3, 4. All right, and that's not including these times right here. Someone came in the market, you know, the powers that be, and they bought huge. All right, folks. So what happened? Well, the second we saw that, we knew we weren't going to go short there, and we looked for the long move up here, and that's exactly what we got into the close. Now, what I want to show you guys is something very interesting. As soon as the market closes, we saw the futures, which close at 4:15, while the rest of the market closes at 4 o'clock. The ES September contract futures close at 4:15. And look what happened, guys. This is the close right here. All right? This is the close right here, and right after we sold off hard, bringing it right down. So the ES going into the close at 4 o'clock was basically flat to plus. By the 4:15, the ES was down 7 points. So be aware of that going into Monday. And this is what I want to propose to you guys. Now, I think personally we're going to open up either a flat line or maybe a gap up on Monday, based on this hard push up into the close. The weekend people are going to be able to think, oh, the Fed came to the rescue. This is good news. Might gap up on Monday. But I caution you, last Monday, a lot of people are thinking, based on last Monday, just like Friday today, they were all thinking, well, we're going to have a huge sell-off. Monday was a huge rally. So thinking in a contrarian view here, I am tempted to say we might sell off on Monday, folks. However, we are at some significant support levels, and I'm going to show you here. On the ES intraday, a support level. All right, right here. All right, that's a support level, and that actually stretches all the way back to right here. In addition, what you can look for is another support level below that right here. All right, so if we do sell off, we're going to watch for a break of that point, a close below that line. You need a close below to go short. In addition, you need a close below this line here to go short, folks, again, for another one. So what you're going to do is, if you do happen to play the intraday game here, and this is going to more day trading, folks, so bear with me for those of you that aren't day traders, you look for a close below here to go short, and you look to cover on this line, because you're going to get a bounce up. All right, you get a bounce off this line. The next time it comes down, closes below the line, you go short again, and that's when we have a big sell, because right here is a big term bottom, guys. This is the 50 moving average on the daily chart, and I'm going to show you guys that on the different charts we're looking at. But let me bring the NASDAQ back. Let's go to the daily. All right, and we're going to put in the 200 moving average here. All right, right on the NASDAQ, we're sitting right on the 200 moving average. This is major support here, folks. Major support. All right, so be aware of that. Huge support level. We break that, we're going down huge. We're going back to early March lows. And I'm going to show you a chart here that we prepared prior to this to show you guys the different support levels of the SPX, the S&P. This is a weekly chart sitting on its moving average. All right, now as you can see here in this chart, this is where we are right now. We came down hard over the last 3 weeks. We hit the moving average right here, the 50 moving average, bounced up, then we came back and retested it today. We did not break. That is significant resistance. That breaks, guys, and you're going to have a significant fall of almost over 50 points. 50 points on the S&P. Down to the lows in early March, right back here. All right, this is the next support level right here at 1375. 1375 is the next support level. All right, folks? Then we break that, and then we're going all the way back down to these lows down here. But this is going to be a lot of support right here. We're going to have a significant bounce here. We will see this low, though, folks. I'm telling you right now, we will see this low. This market is not done dumping out. This market is not okay. We're not going to go back into bull mode. This market is definitely going lower. Now, as we finish up the market report today, the market technical analysis, going into the weekend, what I do want to show you guys is just something that I was looking back on and thought it was just, just wanted to show it again. This is our daily market report archives on www.inthemoneystocks.com. And this is looking right here, July 20th, 2007. And what did we say on July 20th, 2007? We said, in summary, the market sell-off today was abroad with volume. Financial stocks continue to decline. We have pointed out the financial sector weakness as a warning sign for a decline correction. And remember, the charts tell the truth. You guys know we love the charts. We're technical guys through and through. The technical stuff told us everything. We called for a correction there. We said it's coming. Where's the 20th here? Right up here, folks. This is right where it is. The NASDAQ is down over 200 points since that point there. All right, you're talking about 200 points. So at the lows here, the NASDAQ was down over 200 points. We're going lower. This is just a wave. This is the start of wave 3 down. All right, we look for Monday to be very eventful. The trading right now is extremely whippy, so you need to be prepared. Look at this whipsaw action. You're talking about moves in the index, the NASDAQ, of 2% a day, up and down. All right, we were down as much as 50 points today almost. And we were up today as much as 11 points on the NASDAQ. That's a 60-point variable right there. Be careful. Unless you're a pro trader, I don't suggest day trading this market unless you're in the chat room with me, in which case I can help you guys along a little bit. It's still extremely tough. Join the chat room. Join the swing trade alerts. We have some great swing trade alerts scheduled for next week based on what we think will happen in the markets. Be ready. Have a wonderful, wonderful weekend, and be safe, everyone. Take care.